All right, good afternoon, traders. Today is June 20th, 2024. This is a BYOB webinar. My name is John Kerrigan. I moderate the BYOB Trading Room. This is going to be on options, how I trade options intraday. I also do a little swing trading on options as well. I'll explore that. Hopefully, just a little, I'll spend a little bit of time on that. When we talk about options, you got to remember options are always, it's a derivative of price, okay? You're not going to have, an option that's like $10. You're not going to have a $10 call, like way out of line. I mean, especially if it's going to expire today, okay? It's always going to be a derivative of price. And there'll be times when they will mark them up due to volatility. But, when it's all said and done and the day is closed and the option is now expired, there's no more time left in it, it's always going to reflect the price that the underlying security closed at. So it's always based on that. So that's what I'm always looking at, where price is and where price is going. So we'll drill down here into some SPY. So with today's price action, excuse me, I'm looking at 550. Okay, I'm looking at 550 because, well, that was a number, all right? It was psychologically, it's a number that a lot of investors want to take profit at, okay? Now, we were up here. We only consolidated for basically about a day and a half, all right? But we got up here in a quick hurry fashion. It's all in the manner that we got up here. Now, if we'd have consolidated under 450 for multiple days, I could have said, well, there's a chance it's going to go through 550 and probably consolidate on top of that. But you can see 550 was a number that the market had in mind that they were shooting for. And I think it was based on the fact that they bought this pullback right here. Okay, so you take this pullback, all right, and you measure it off, and just like institutions, they're going to want, if they're going to buy this dip, they're going to want a 2 reward for each risk unit. So let's just say that this area right here represents the dip, and we'll measure it off 2 times. So we'll duplicate a box, stack it on top, okay? And then we'll duplicate another box, all right? Not quite what I wanted. Duplicate, stack it underneath, all right? And then we'll duplicate again. Okay, so then we'll take this box and stack it up here. So you can see right there, all right? Now, I didn't tweak it too much, but you can see that would be, here's number 1. This would be, right here would be one risk unit, and now you've got 2 rewards. So here's 1 reward, and then up here you got 2 reward, okay? So 1 risk unit, 2 reward units, okay? So they bought this dip, and they wanted 2 reward. And you can see that's where the market is stalling today. Not to say that that's going to be the end of it, but to me, that was a target. 1 risk unit, 2 rewards. So I measured this off, and I get 1, 2, and I stack them up there, and that's what I see as a target. Now, sometimes it comes out to be like, 549, 550 or 550, 551. So I know 550 is the big fat whole round number that's probably going to be the target for SPY. And I'm going to look for probably, a lot of investors are probably going to start taking some price action. Then on top of that, I've got an Andrews pitchfork, okay? Remember, I'm going to get into the options, but you got to understand that options are always a derivative of price. So I want to see all through here, I'm buying calls, okay? Now, when I woke up this morning, I see we're up around 550. I'm expecting price action to probably fill gap, and that's pretty much what I wrote inside my comments in the alerts. If you're in my room, all right, I said that, you know, price action is up around 550. I'm expecting some profit taking. I'm expecting my first target's gonna be gap fill. All right, then you can see after the gap fill, they come off and they set a lower high right here, okay? So from that lower high, I drill a channel line off the top. All right, now if they break that low, in other words, this is what I want to see, okay? I want to see red erase green, okay? On the price action, this is what I need on the price action. The price action has to perform. Otherwise, the option will not perform, okay? So I'm looking for price action. I want to see red erase green. Now it gets down here and you can see it kind of stalls and stalls out for, excuse me, 3 or 4 candles, and there it is, the 3 candle hold, and then you get the blast through, all right? 3 candle hold, and then you get the blast through, and you can see the dip right happen right there. So that's what I'm looking for, is red erasing green, okay? So we came down to gap fill, bounced back for about $1, which is a typical bounce off of a gap fill. You can see here it is. The gap fill would be like 548.47. You typically get $1 bounce off of that 548.47. You can see, let's see what we got here. 549.56. All right. There's your dollar bounce, right? Okay, now I see bearish engulfing. Okay, I'm watching this all intraday on the 10-minute chart. Okay, you got the bearish engulfing. Okay, they're coming in, and now they're right back here at the gap fill line, and I can see them consolidating in a bearish pattern. And as I'm looking at it, I'm looking for clues. All right, I'm looking for clues. I'm expecting 550 to present some resistance today. Okay, but I need clues. All right. First clue I want to see is I want to see if they gap up. I want to see the bulls fail at holding the gap open. All right, there's ticket number 1. Okay, ticket number 2, I want to see a lower high. Okay, we already got a higher high. I want to see a lower high, so there's ticket 2. All right, number 3, I want to see something else, like some kind of bearish confirmation that things are going on. So as I'm looking at this, I'm looking and I see like, well, there's a wick. All right, you can't see the wick, but if you slide this price action together, okay, because you've got a candle that rallies up from this point all the way up to there. I didn't want the arrow. Okay, got to fill it in. Take the green candle and fill it in. Okay, so a little bit thicker. Okay, get the green candle, fill it in. So you can see price action rallies up, and you can see 1, 2, 3 candles down, they take it out. Okay, so that if you slide all of that price action together, you get pretty much a wick. Then you've got this price action. So you've got another wick if you slid from this green over to this red candle. So now I'm looking and I'm seeing, what equates to being a descending wick. So all of this would be a wick. If I combine all of that, I got to do it mentally sometimes. All right. I see a wick. I got a lower high. All right. And now I'm picking up on this. I got wick, wick, wick. All right. What do you think's coming? All right. You got wick, wick, wick right after these two descending wicks. Got another lower wick there. Got another lower wick here. And another smaller wick. It's coming on. All right. This is winding up to blast down. All right. So that's what I'm looking at. And when I see that, I decide, okay, I'm getting all of the confirmation that I'm looking for today's price action. So now I got to decide which option I want to play. All right. Now, I like options. I'm not concerned about implied volatility. All right. I'm not concerned about volume. I'm not concerned about gamma, theta. All I'm pretty much concerned about is time and open interest. Well, theta is time. I take that back, okay? I'm concerned about the time and the open interest. I'm not planning on holding these for a long period of time. All right? I want to play it. All right? I want to play a big piece of capital, all right? Because you can get, 10, 20 times your leverage using options, okay? That's what options make available to you. Can you imagine, let's just say, controlling price? Let's say you want to, let's say I bought an option for $1 today or $2, okay? So I can control, well, that's 100 shares, all right? So 100 shares times $1, all right? That's $100, right? So for that's $100, and with that $100, I can control 100 shares of this ETF. So that's 550 times 100. I'm controlling $55,000 worth of capital with $100. Okay, that's a lot of leverage right there. Okay, that's the whole reason for using options, is because it allows you to leverage your money. All right, so I'm getting, beaucoup amounts of leverage by buying options at a dollar a share. Okay, you can see that that's just crazy amount. All right, now I'm looking at but I don't want to do it unless I've got price action lined up in my favor. I just can't do it aimlessly. To see clues that are going to reflect price to go in the direction that I want it to go. So I'm going to be looking for some puts, right? Because I'm expecting, I got the descending wick pattern. I've got the bulls failed to keep the gap open. I've got a lower high. All right, so I'm looking for some puts. Now, I like them to be about 50% of the 10-day ATR in the money. All right, they don't have to be, but that's where I like them to be. Okay, so let's just say the 10-day ATR is 423. All right, the price action is at 548.50. So I'm looking for probably 551s or 550s puts. But the trick is I want them to have a lot of open interest. Okay, I want them to have thousands in open interest, not just 100 or 50. Okay, I want thousands, because when I want to get out, I want there to be a lot of people providing liquidity for me to get in and for me to exit. Okay, that's what I'm looking for. I want to get in and I want to be able to exit, and I don't want to get burned, okay, on a lot of the fact that there is no liquidity and the market maker can open up the spread and just kill my performance. All right, so I tend to trade the Fridays. All right, I tend to pick the options that expire on Fridays because they provide the most liquidity on a Friday. All right, that's what I'm looking for, the most liquidity. All right, so if I take my options chart and you look at it, let me see if I can drag this out of here. I might have options up here somewhere. Do I? Just going to check. I can't see real well. Oh. Let me duplicate this. And I'm going to tab it. All right, so it's in here. So here's options. Now you can see these are the options that expired today. All right, now let's go to where the money is. This is the SPY, and where the money is at 550. Okay, see the thousands of open interest there. And notice up here 549. It's only 5 or 20 right here. Now let's go to the 1 day. All right. See how little is up here at the 549, 550. Okay. It's all at 546 and 547. So now we go to the 1 day because that's tomorrow. Now notice the amount of options that are expiring today. Okay. So let's just take it from 546 and we're just going to ballpark it real quick all the way up to 553. Okay, you got 11, 162. We'll call it 200 right here. All of this, all of that 200. Okay, then we got another 400. We'll just call it 400 rounded up. So there's 400, 600, and then you got 1.2, 1.2, 1.5. All right, so there's probably another 4,000. 4,000. We'll call it 5,000. Roughly, all right, between 545 and 553. Now we're going to go down to Friday's options, all right? And then we're going to go down to where the price is happening. Same area, all right? We're going to go to the puts, and we want these areas right here, okay? So now you notice we're going to go to 545. All right, you can see 545. It's not as many, but there's multiple puts here. That's why. All right, but you can see the difference: 10,000, 19,000, 11,000, 6, 6, 1, 1, 409, 207. You can see the amount of difference that you would have seen as you look at this area over here. Okay, there's almost twice, 3 times as many options expiring on the Friday than there is, like, excuse me, on a Thursday. So that's why I pick Fridays, because they generally have more open interest. Okay, we'll take, for instance, of course, some of those might have already traded. All right, we'll just take these. All right, let's take the 550s. All right, open interest 784. We'll go to today's open interest at 550, and please don't make a liar out of me, 22. All right, so you can see the difference. I got 22 open interest here at 550. Okay, although the volume is 60,000 right there. Okay, and then on tomorrow's open interest at 550. All right, because that would probably be like the product of choice. 550, 551. You got 784, and they've already traded 12,000 in volume right there. All right, so you can see the difference. You get a lot more in the Friday options than you do a lot more open interest in the Friday options than you do with the 0 day or a 1 day or a 2 day. Okay, these just happen to be 1 day because they're tomorrow's Friday. Okay, so you can see that. So we come back here. All right, and that's what I'm looking for. I'm looking for price action to keep moving up. I also chart these out on my on a chart. So I'll take the 550. All right, let's just take the 550 for instance. And all right, we'll pull up a chart. Now I'm going to come back over here if I can find my way all the way back over there. And we'll pull up the chart. And I didn't get it. Okay, let's try it again. Hold on, I'm going to get it for you. 550. 1 day. We're looking at the puts. And this needs to be blue. Okay, so 550. All right, now we come back over. All right, you're going to see what happens to that option. All right, so here's that option. Okay, so I like to buy. This would be right there, would be the place to buy it. Right there at 390. See, that's 390. Okay, and then you get a pop. You can see up here, I don't expect to capture all of that, but I will stay in the 10-minute trend as long as it continues to perform. Okay, so let's say I bought it at $4. All right, and within, let's just say that happened at noon, and you can see what's this hour's candle is 1:30. All right, so within an hour and a half, I'm up 30%. Okay, if I bought it for 4, all right, I'm actually up 50%. And let's say I'm selling it for 6, all right? If I'm selling it for 6, I'm already up 50% of the capital that I used, all right? So immediately I'm making, you can see how fast that works, okay? But I have to stick with the 10-minute trend. All right, it's imperative that I, excuse me, SPY. Okay, it's imperative that I stick with the 10-minute trend. Okay, you can see here's the cross. There's the red wipes out green. Okay, there's the red wipes out green. Here's the red wipes out green. And here's another entry. It's getting close to 2 o'clock. I don't know if I want to take that, but I do have a target of 545.20. Now, why is 545.20 one of my targets? I take the quad lines. I measure off from the bottom of the consolidation here up to the top of the rally. You can see right there, that would be the midpoint, basically 544.90, 544.20 area. That's my target. Okay, that's another one of my targets. Okay, my first target was gap fill. My second target was, there was an anchored VWAP right in through here. I think it was 547.60. I had one there, and then the 547 pivot. And then you can see we're down here at the bottom of the consolidation. Okay, now notice of the consolidation, okay, the top of the consolidation should be minor support. Okay, when we break through the major support, that's the bottom of the consolidation, you'll notice things fall apart. Okay, notice the market's no longer bullish. They're not interested in not one bit. All right, why? Because we broke the major support, which is the bottom of this block of consolidation through here. Okay, you got a block of consolidation right through here. Okay, see where price does nothing but whip back and forth over VWAP, back and forth over the 8 EMA or the T line. You can see the price action just does nothing but whip back and forth. There's the consolidation. The minor support failed to hold. The major support fails to hold. And now you get a breakdown in price action. First target after if it breaks through that major support, it's going to be my midpoint right here, which happens to be, I think it's 444.90. All right, so let's take this off and just measure this out. I'm not very good at this. All right, so 444, 444.90, right about there. Okay. All right, now we're going to see how it reacts to the midpoint. Okay, should be a 50-cent bounce. All right, should be a 50-cent bounce. We'll see how far they want to go. Here's the channel line. All right, we want to see if they obey this channel or they disrespect it. So we'll see if they come back and get it back inside the channel or make a trip back to right here. So price came down, hit the pivot, bounced back into the backside of the Andrews pitchfork, and then just H pattern rolled over right here. So this is a target, 544.90. All right, and then we've got another all-time high anchored VWAP. We'll put this one right here. You can see that pivot right there. So they may spike this 544.90 and come all the way down to 544.50 just to hit that all-time high anchored VWAP right there. Okay, that's the prior all-time high anchored VWAP. Can't use this one because price is underneath it. Price will definitely come underneath that. So this one won't work. You'll have to use this one right here. Right there. That was a prior high. All right, so this is going to be a target. This all-time high anchored VWAP. See that? 544.50. So that's what we're shooting for. Doesn't mean we'll get it. We might not get it till tomorrow, but we'll see what happens. So you can see we'll go back to those options. Let me pull up my options here. Let's put this on the blue and flag and 550. Now you can see buying the option and obeying the 10-minute trend. Okay, let's say you bought them. Let's say you got them late. All right, let's say you wanted to see the move happen before you got into it. Okay, let's say you got them and they were $4. Okay, so you can see now if it's at $6, that's a 50% gain. Okay, if it goes to $7, that'd be a 75% gain. Okay, and you can see right now, here's price action back on the SPY. All right, not quite hit the target yet, but definitely still got that 10-minute downtrend, still got red erasing green. So we're looking for the target down there. You can see if we go back to that option, that has a good chance of hitting $7. So $6.99 would be probably where I would start placing my take profit right in about there. All right, it's getting close. It's at $6.65. All right, so but that's how I trade my options. All right, I gotta see price action, because without the price action, the option is not going to be worth anything. You need to have the price action moving in the direction that you prefer to go. Like if you're bullish, you're gonna want calls. If you're bearish, you're gonna want puts, right? It just makes sense. Now I got a few questions, Bob. What is the green that red is supposed to erase? Yeah, it's the candles, Bob. Yeah, it's the candles. We go to SPY. Okay. All right. You got to imagine, okay, we started out up here, Bob, okay, but somewhere in the futures market and overnight, price action traded up to that place, okay? Price action moved from here, up to there, okay? So that's green. You got to fill it in, right? Whenever you gap up, I fill it in so I know what I'm looking for, all right? Let me move this back one so you can get the green candle. Okay, so I fill it in, all right, because we capped up to here. See, that's the opening, that blue line. It's hard to see, but it's there. So there's the move up. Now here's the red erasing the move up, Okay, the overnight move up. Remember, we closed here and the red just erased it. Okay, then guess what happens? We trade back to the top of the channel, all the way back to the opening number, and now the red candles erase the green again. So that's 2 bearish engulfings in a row, and now we start to see the descending wicks. Okay, now here's another place to add. See right here, red wipes out green right underneath this area right there. Okay, red wipes out green right underneath the body. You can play the wicks, the tails, or you can play the bodies, either one, whatever your choice is. I like to play the bodies because I like to get in early. All right, but sometimes, let me just say, I pay the price for anticipating and getting in early instead of waiting for it to actually take out the whole tail. Rickster says, Oreo cookie, red takes out green, maybe now short. Right. Yes. Yeah, when red takes out green, that's my entry to short. Now, traders, if you're going to trade intraday, you got to think about it. All right, tomorrow's a new day. Things can happen overnight. The dollar could get bullish. The dollar could get bearish. We don't know what it's going to be. Here's the dollar. Okay, so dollar's getting bullish. You know that's bad for the markets. When the dollar's bullish, we want a weak dollar because the weak dollar makes, our goods and services that we sell here in the USA, they makes them more competitive on the global stage, okay? Because we're competing against other companies and other countries that sell products similar to ours, okay? So it's imperative that we're competitive. If we have a strong dollar, all right, the conversion rate costs those foreign countries, okay, more money to buy our goods and services. So we don't want a strong dollar. We want a weak dollar, and hence when the market has a descending dollar or US dollar index, you'll see it tends to rally or pull back from going any lower. All right. So here now we've got a change. We've got dollars in an uptrend. All right. Because we broke these highs right here. Then we came back. We hit the 200 SMA on the daily chart. All right. And then we ran off to make a higher high. Okay. Not a good sign. And then we had 3 flaky days pullback. Notice the pullbacks aren't looking like this. Okay, they're not like this. The pullbacks went up, and then they went like that. Okay, 3 days, and now we're getting another green rip up. All right. What we would have wanted to see was a mountaintop go up and then come back down. We didn't get that. Okay, whenever you see that weak pullback, be prepared for the next rip up after 3 days up, especially if it holds over on top of support for 3 days straight. And here you got it. We rip up, holds for 3 days. Lo and behold, just like the webinar I did last time, you get another rip. Okay, see the rip that's happening today? All right, so let me take that off. Take this down. All right. So what we want is a weak market if we're going to buy the puts. Bottom line. You following? I understand. Oh, you're welcome, Bob. Awesome. Yeah. So I'm looking for, red erasing green. Okay. Now it's a pretty good sized green candle. Okay. I have to start thinking we're all the way back at the 8. I still got a 10-minute downtrend. It's past 2 o'clock. What was I talking about? I was talking about 2 o'clock, right? Okay. You got to start thinking like, there's only like 2 hours left in the day, okay? If the bulls are going to make something happen, is it going to be in the last 2 hours? It would be more feasible to see them start something at the beginning of the day, all right? So after 2 o'clock, if I do take a trade, it's usually with, how do I say it? a quarter of my position, a tenth of my position. It's really just it's a real small amount because I don't want to start something that may fail if I hold it overnight. Okay? And I'm not getting that good feeling right now. Now we haven't hit the midpoint, okay? And the market is still bullish, all right? And we didn't hit the midpoint, and we got a bearish, almost a bullish engulfing right there. See that on the 10-minute chart? What does the 15 look like? Almost bullish. That's a bullish candle right there. You know, if that gets followed through, you know, I have to rethink this and say, maybe not take this put. Maybe I just let this one ride, okay, on the SPY, because it's, you know, it's getting close to 2 o'clock. Do I really want to start something new? And if I do take it, why not just do it with a tenth of a position? That way, if it doesn't work out, I'm not losing a lot of money, all right? I take my stop out. I lost some money, but it wasn't a full-size position like I would have put on when I saw the breakdown coming here, okay? Now, the market's still bullish, all right? It's still in an uptrend, all right? We're just having a red day, and there's some profit taking at 550. This is not new. This happens all the time, okay? Excuse me. So you can see, like, I'm expecting this, all right? Not to mention, you saw the 2-for-1 risk reward. That was a target for them, all right? Not to say that they can't jack it up even higher. That could happen, all right? But that was a target. It's 550, all right? So I'm looking for a sell-off today. This isn't a big red candle down wiping out 10 candles. All right. It only wiped out whatever happened on Tuesday. That's it. All right. This is still bullish. So, you know, it's 2 o'clock and I'm saying to myself, you know, maybe that's it for the day. Let me just take my profits and just kind of bank them, and I'll play around with a tenth of a position for the rest of the day. And that way I book my profits and I get to keep most of them. Okay, that's my strategy. Now, when I swing trade, I like to, how do I say it? I like to have a lot of time. But here's the problem, though. I have swing traded so many times, and I run out of time with options. I do much better on intraday. Okay, so trading with options, I prefer to have a lot of time, but you can't have too much time because it takes away from, you know, price action getting to the destination. Remember, on your price, if you buy a 550 call, okay, and you pay $10 for it, okay, by the time it expires, it has to reach 560. You guys understand that? Okay, if you buy a 550 call and you paid $10 for it, okay, it actually has to reach 560 for the intrinsic value at the time of the close, all right, in order for it to be profitable. Okay, so you got to give yourself enough time for it to get there. It'd be better served to buy the 540 call for $10, all right, if you could get it for $10, all right? So when it expires and price goes up over 550, all right, actually the 530 calls would probably be even better, but actually be better just to buy the dip with the institutions right there. So I know you guys got questions, so go ahead and hit me up with some questions. Come on, somebody got a question. All right, when do I close? When do I take my profits, right? There's a good question. How come nobody asked that? All right, how about when the 10-minute trend closes or I see bullish engulfing? Okay, how about when that 10-minute trend is done or I hit a target? Now I take profits into targets all the time. Okay, as I'm coming into targets now. I don't get to hit all my targets all the time. So here's the target, which was the midpoint, 544.90. You can see we didn't quite hit it yet, this anchored VWAP, but I'll bet it hits it tomorrow morning right there. All right, but when this 10-minute trend is done, that trade is over. Or if I see bullish engulfing on a big candle, that trade is over. If I get bullish engulfing on a small candle and the 10-minute trend still open, that doesn't count. All right? If I get bullish engulfing on a good sized candle like this one right there, okay, or this one, okay, if I get bullish engulfing, that trade's done. All right? Or this 10-minute, all right, when the 3 crosses over the 8, that trade's done. Just take my profits, all right? I might not have made everything I wanted to make. Let's go back to those options. See where they look now, okay? Because remember, those were the 550 options. The intrinsic value of that option, remember it was 550, okay, is $3.70. All right? Remember, we bought it for $4. All right? So we'll hit that option. Okay? See where... All right, so now price, the bid is $5.39. That's on the one-day option. You add $1 because it's another day left on it. Okay, so it's actually trading about $4.34, right about there. All right, which is not much over the place where we bought it would be $4, right? Because you got 1 day left, so you got like about $1 of theta added in there. Okay, because this is a 2-day option. It's actually a 1-day option. It expires tomorrow at 4 p.m. Okay, T says, what time of the day do I stop entering new positions? If I see a thriller trade, I will take a thriller trade at the end of the day, which happens usually at 3:30 or right around 3:15 or 3:45. But usually after 2, it's generally not good to put full positions on after 2. For me, it's not that I'm not that successful after 2. The biggest part is when the biggest part of the move comes, and that happens right about in the afternoon, right after 10 o'clock. 10:30, right after 10:30 is usually when things get hopping and popping. Does that help, T? Yeah, the thriller trade. Yeah, we may get a thriller right into the midpoint at the end of the day. You can see it pulling back. See this bullish engulfing happening now. So we may get a thriller into that midpoint. I'll need to see a 3-minute downtrend in order to play that thriller trade at the end of the day. All right, but let it do its thing here and see. I'll need to see a 3-minute downtrend to play that thriller trade. Yeah, the hold my beer trade. Yep. All right, some more questions. You guys got some more questions? You guys understand how I do options? Like you could do it. I know you guys got a question. All right. Now sometimes on the options, there's not much time left. All right. Think about it. These options here only have 1 day left. Okay. So there's times I have to go out 7 more days. So I go out to the 8 DTEs, which expire next Friday. Okay? So I'll have to go out to the 8 DTEs that expire next Friday. Let's see what those look like. 550s. Okay, get 700 there. Not a whole lot going on there yet. So there's the open interest, but you can see right there. Bob says, do I align on the higher time frames or keep it on the 10 minutes? Yeah, Bob, I prefer to on my trades, okay? I prefer a 2 hour, either 2 hour downtrend, okay, and a 10-minute downtrend inside it, okay? Now, I didn't follow that rule today because I was a little bit of anticipation, some 550 profit taking, okay? So I was looking forward to that. Otherwise, I wouldn't have gotten this trade, right? If I followed my 2 hour uptrend, all right? So I'm looking for a 2 hour. I like to see the 2 hour. The daily is in an uptrend. The 2 hour, believe it or not, still in an uptrend, all right? But the 10-minute was in a downtrend, all right? Now, I kind of had a hunch, 550, we were going to have some profit taking. So that's the only reason I played that, okay? Now, based on that, okay, we are still in a 2 hour uptrend. If I see some green erasing red, all right, I have an opportunity to play this long because I do have a 2 hour uptrend, but I got to see green erasing red, right? So I kind of prefer that price be up over this pullback. So anywhere back over, see this would be minor resistance now, okay? This is minor resistance. If we got up above minor resistance in the midpoint, I'd be more interested in taking a long 10-minute uptrend up there. But it doesn't leave us much room. Okay, VWAP is right there. You can see it right there. It's at 547.97. All right, so it doesn't leave us much room. But I've seen it go through VWAP because price is still in an uptrend on the daily chart, still in an uptrend on the 2 hour chart. Today we're only experiencing a 10-minute pullback right there. And there's your 10-minute downtrend that ran away from VWAP right through there. Does that answer your question, Bob? Is that what you were asking? Yes, Kathy. See, I do hold some trades overnight, especially when they close at the end of the day, at the high of the day, or they close at the end of the day at the low of the day. In other words, I'm looking for them to possibly gap lower the following day if they close at the low of the day. Same with the ones that end at the high of the day, especially trend days where I see the price action close at the end of the day, at the high of the day, and it was like bullish all day. Yeah. Oh, you got it. Good. Thanks. Malcolm, you haven't posted your calendar returns. Yeah, no, I haven't. I haven't. It was confusing for too many people, so I don't post it. But I share all my trades right in here. I'm still sharing them in the room. You can see every single trade that I take from the beginning of the day to the end of the day. I still share them all right through here, and I call out the trades in the room. People got confused over the calendars, so I just stopped it. It really doesn't matter how I'm doing, but you can see how I'm doing right here. Right? You can see how well I'm doing. right, by looking at my trades throughout the day. Okay? They're all right there. I mean, this is open all day long unless I'm in the combined room doing a webinar. Yeah. Well, I'm doing well. All right. I'll just put it like that. All right. Well, I don't know what to say. People get confused. I can't. I got some people say they want it. Some people say they can't understand it. So rather than go through it, I share my trades every day. Again, I share everything in the room except I just don't do the calendar anymore. Thanks, Rickster. Thanks, B12. Yeah. So you guys got some other questions, right? Some really good questions, like how do I trade this? Somebody got a question like how do I trade this? How about AMD? How about AMD? Did anybody trade Oh, it's 2:00. How about AMD today? All right. Let's just go look at AMD, and then I got to turn it over. Rick's coming on. All right. How about that? Was that a nice? Huh? Was that nice today? Big rip. Little MMRP right over here, right over the anchored VWAP. All right. We played that. Boom, boom, boom. Pull back to the other anchored VWAP. Love it. AMD looking good, breaking out. Maybe could see some rest sector rotation. Maybe AMD wants to act more like retail. All right, traders, that's it for me. Everybody have a wonderful afternoon. All right. Thank you for being here. Thank you for the questions. I'm going to turn it over to Rick, and he's awesome as always. All right. So everybody have a wonderful afternoon.